Good morning, June the 3rd. It's Friday, end of the week, and it is non-farm payroll day, the biggest number of the month. Bit confusing for gold for me at the end of the week. Things were going so well when we were buying it down at 1845, 1840, and seeing up to 20 points on a bounce. The break lower on Wednesday confused me. I thought we'd broken the support level, therefore we had to go down. We only got as far as 1828, and then we've rocketed back up. Yesterday's low actually at 1845, 1840. So the break up through there and then the retest of that level. Well, maybe if you were smart, you managed to stop out when we broke above 50. Where did we get to? Oh, we got to 50. No, sorry. So that wouldn't really work, would it? We got to 50, dipped back to 1845, 1840, and then, of course, took off. So stops above 50 were triggered. We've got up as far as 1873, 1874. Looks like we could get to 1890, 1895. This is a very obvious resistance level up there. We've got 38.2% fib on 100-day moving average, 50-day moving average. No trend lines to speak of particularly, but I would certainly imagine that will be a strong resistance level. Now, whether we get there today or not, it's quite it's a long way, isn't it? It's 25 points or so to get there. But I suppose it all depends on what happens with the non-farm payroll number. Silver also, of course, broke higher. So shorts were stopped on that level. Although we don't trade the dollar index, I've been using that as guidance because that's really been holding its level. So I suggested yesterday that the dollar could reverse and go lower. Well, that certainly happened despite this lovely green candle on Wednesday when you would think there would be follow through because we closed near the high of the day and it showed real positivity. The market did reverse from that resistance level. So my theory that we will trade within these parameters seems to be holding at the moment. Therefore, we'll have to see if we do test 101.40, 101.20, a weekly close below 101.00, of course, would be negative for next week. If we break up through 102, I'm going to say 102.80, 102.90, close above there, that would be bullish for next week. But otherwise, looks like we'll form this sideways pattern as I suggested. Now, on that note, looking at the Aussie dollar, we've gone up to the resistance level. I think I had stops above 72.80, so it's a bit tricky. We did get to 72.80. This resistance level certainly being tested. We've gone a little bit higher overnight, but we're pulling back. So it all depends on really what happens with the dollar, of course. But just be aware that the Aussie is holding resistance, just testing resistance, I should say, barely holding it. It is tricky. The yen pairs, right, dollar yen heading back up towards that previous high. Nothing else really matters. That 140, 131 sort of 25 area is absolutely key. Do we get a double top there? Or do we break up through there? So that's all that matters. Holding there. If we test it today, if the dollar does have a run up, and we do test that level, and then we get a negative candle, you know, like a long upper wick, something like that, shooting star, some sort of gravestone doji, something like that, then it would be quite negative for next week. It would indicate that we do have a double top in place. But right now, there's no particular trade I can put on here. It's all pretty much in no man's land. Euro yen, I think it was a similar situation for the euro yen, getting close to the previous high at around 140. Yeah, so again, is this a double top? Let's have a look at it on the weekly chart. Do we form a double top there for a potential sell signal? Hang on, there we go. Do we form a double top for a potential sell signal, or do we close the week above 140? So it really is a case of waiting to see with that one. Aussie yen, New Zealand dollar yen would be safer to trade today because, of course, they're not dollar pairs and therefore they shouldn't be affected by the non-farm payroll number. But, you know, we've had a great run. Once we broke out of that triangle, the Aussie yen has just run and run and run. If you were smart enough to jump into a long position on that break, as I suggested, then you've done very well indeed. Same thing for the euro yen, which it kindly came down to retest that trend line and then ran. New Zealand dollar yen has also run and run and run nicely after we broke above the little trend line triangle upper, the upper trend line of the triangle. That's what I'm trying to say. I'm also trying to draw a trend line here, but that's not going to work. Anyway, it doesn't really matter because that trend line is not particularly relevant. So that's run and run and run. I wouldn't be shorting this myself. I don't see any reason to. If you're looking for a reason to short it, I can show you a little trend line, but I'm not going to put too much importance on this. This goes back to something like February 2021. So we're approaching it. The trend line's at 85.60. It's not a strong enough reason for me to want to sell the New Zealand yen. But if you were looking for an excuse, there's your excuse. Certainly, New Zealand dollar has not done as well as the euro yen and the dollar yen. We're nowhere near the April high there, are we? Let me just put that on. Not a surprise to see the euro rocket. We bounced just above that 106.20, 106.00 support level. As I suggested yesterday, the dollar could reverse because it was hitting the resistance level. So not a surprise to see the euro push up. We actually beat the Wednesday's high. So this is tricky. Look, 1, 2, 3, 4, 5, 6, 7. 7 days where we've just gone up one day, down the next, up one day, down the next, pretty much. But you know, that kind of thing. So we really need to break out of that range. 108.00, 108.20 should be a strong resistance level today if the euro continues higher against the dollar. Cable's been holding its levels. So I've left the same levels in the sheet today. If you're scalping away before the non-farm payroll number, strong resistance at around the 126, what is it, 126, what have I got? 126.30, 126.40, which works quite well this week. What else can I talk to you about? Stock markets roared. Again, I suggest the stock market is probably entering a sideways trend where we'll go down a bit, then we'll go up a bit. That turned out to be the case. We didn't quite get down to my support level at 40, 50, 40, 30, which was frustrating. That was a good level down there, but we did turn around and go up on that, was it ADP number, I think, private payroll number, which, well, certainly triggered a bull run anyway. So I think it was a weak number and indicated that maybe the Fed will hold off when interest rate rises, or that's how the market read it. I don't know. So you can see the range that we're in, up to 42.00, which is a minor resistance level. We start getting up through 42.05, 42.10. We're going to push up to probably 42.30, 42.40, even 42.70, 42.80. So there is some decent upside on a break above 4200. I watched that 40.50, 40.30 area in the S&P on the downside. Even the Nasdaq showing some strength now. It's broken up through that resistance level, which held so well at the beginning of the week. As you know, at the beginning of last week, I suggested that the stock markets would recover. We'd seen the end of the correction and we could have a period of stability or even a recovery in the early part of the summer. So that is happening. It's not. We've now the Nasdaq did struggle at that 12,700, 12,800 area, but it looks clear that we've well broken through it now. Nice big green candle. So I think we can push on to 13,400, 13,500, which is a very strong resistance level. Doesn't make any sense to me fundamentally. I still think that in the longer term, stock markets are going to go down significantly, but you know, they are allowed to bounce. They will bounce. The shorts need to be squeezed out before the market can then turn around and collapse for the next time round. Maybe that collapse will come when we hit that sort of mid 13,000 area. We'll have to wait and see. But it does look like the stock markets are in the mood for pushing higher. DAX also broke up through the resistance level that had held so well earlier in the week. I think it's now beaten the 100 and 500-day moving average. The 100-day moving average is clearly about to cross below the 500, which in the longer term is quite a negative signal. But for now, the price is above those moving averages. So I think that we're going to take that as a bullish signal. This is a little bull flag. We know that now, of course, now that it's been completed. This is a little bull flag here. We had a sort of a little bull flag here. So I think we can run up to sort of 14,800, 14,800 to 900 would be the target for me. So we've got another 200 to 300 points to go up. Maybe we'll get a trigger for that from the non-farm payroll number today. But that will be a strong resistance level as well. And ultimately, I do think the market will turn around and collapse, as I've said. So it'll be interesting to see what happens if we get to that level. Okay, I've talked very quickly, tried to get as much information as I can in there in 9 minutes. Hope that's helpful. Give me a shout if you need some help from me today before the non-farm payroll number. Keep an eye out for me. I'm doing a trading battle against Nick Leeson later on today. I put the details in the Telegram box. Okay, that's it. Have a great weekend.